Hi there, everyone. Thank you for joining our rescheduled quick pitch today. I'm Kat Delgado, here to co-host our event with our CEO, Hall Martin, who's going to tell you a little bit more about what we do here at 10 Capitol Hall.
Great. Thanks, Kat. I want to thank you guys for another great presentation today here at 10 Capital. Several great presenters here for you to view in a moment. But before we get into that, let's talk about 10 Capital and what we're all about. I want to welcome you to our quick pitch virtual event today. We do 4 online pitches virtually, family office, syndication, quick pitch, and also investor education. So with that, let's go to the next slide. So at 10 Capital, we help connect startups and investors for funding. We advise on fundraise strategy, help with pitch decks, and set the events to engage with investors and also help with the follow-up that goes into it. We've actually crossed over $1 billion of funding raised since we started in 2009. We were originally called Texas Entrepreneurs Network and rebranded to 10 Capital in 2016. But in short, we provide the legwork, saving you time and money. Next slide. So in addition to helping startups raise funding, we also help form capital for the early stage startup ecosystem. We help high net worths find investors. We also help VC funds find limited partners, and we help angel groups find members. And what we're doing is we're actually helping people find money for their fund, primarily through family offices and helping the high net worth start family offices. So by helping them in that way, we're actually helping form capital for early stage investments. So that's what we do. Next slide. Like I said before, we have 3 other events that we run online. In addition to this one, we have the Family Office Roundtable. We talk about topics relevant to the family office world, and then we have our company's pitch at the same time. We also have a life science syndicate event where we have half our deal flow is on the life science FDA path of some kind, a medical device, diagnostics, therapeutics, etc. If you want to learn more about our events, go to 10capital.group and click the events button, and you can see all the events that we have coming up. Next slide. If you're a startup, go and take a picture of that QR code and fill out the form, and we'll follow up to see if this is a good fit for your fundraise. And looking forward to talking with you guys about how you might structure or strategize your raise through our program. Next slide. We also have a program called Investor Connect. It's a podcast program we've been running since 2013. Have over 850 interviews with VC angels and family offices on what they invest and how they invest. We also have written a Startup Funding Espresso, a 300-word micro blog post every day for the last 5 years, and we have over 2,000 of these now. And so when AI came along, we found a solution for how do we communicate all that to our audience. And so we put it inside a private LLM, which is a private chatbot that we use for all of our information. And so let's hear more from, we call it Ava, and let's hear more about how Ava works.
Hi there. I'd like to introduce myself. My name is Ava, your personal AI venture assistant. I'm your new best friend in the world of investing in startups, the 10 Capital AI chatbot. I'm here to make your journey through the startup ecosystem easier, faster, and a lot more fun. Need help finding your next big investment? Or maybe you're a founder looking for fundraising tips? I've got you covered. I pull all my knowledge from over 500 blogs, countless podcasts, and even some nifty calculators, like the How Fundable Is Your Startup tool, to give you the answers you need. So how do I work? Easy. You simply go to where I live on startupfundingespresso.com and look for me in the bottom right. As soon as I appear, go ahead and click on me to let me know you're here. And then there you go. All your questions answered at your fingertips. Whether you're into health tech, biotech, life sciences, or any of the other exciting fields out there, I'm equipped to help you navigate the trends, challenges, and opportunities in each one. Got a question? Just ask. And guess what? I even pull insights from the 10 Capital Network podcast on Investor Connect. It's packed with expert advice, success stories, and more, all designed to help you succeed in the venture capital world. So what are you waiting for? Let's chat. I'm here 24/7 to help you find the right answers, connect with great opportunities, and make the most out of your investments. See you on startupfundingespresso.com.
Great. So let's get started. Thank you guys for joining us in the audience. We did have this scheduled a week ago, but there was a Zoom outage, so this is a rescheduled event. Thank you guys for joining us here today. And before we jump into our first presenter, each one will have 10 minutes to pitch, 5 minutes of Q&A. Those in the audience, please put your questions in the chat box and we'll answer it, or the Q&A section on the Zoom itself. But let's meet our panelists. First up, we have with us Andrew Abraham of New Cordo. Can you tell us more about yourself, Andrew, and your fund?
Howdy, y'all. My name is Andrew Abraham, calling from Austin, Texas. I'm here representing FIntegrate Capital, and we're an inception stage investment firm that helps founders like you close on early stages of capital at the formation stage. We're trying to solve what we call the pre-seed paradox, in which pre-seed investors demand certain metrics or kind of indications of success that require the pre-seed funding that founders like yourself are going after. So at FIntegrate, we're trying to help you from scaling to growing to being successful in your fundraise. And so I'm out here representing, and I'm happy to be here.
Great. Thanks for joining us. Also from Accordo, we have two people with us here today. Let's start with Christina Hazemer. Christina, can you tell us more about yourself and Accordo?
Absolutely. So my name is Christina Hazemer. I'm the Director of Strategic Initiatives with Accordo Regulatory Solutions. We're a full-service regulatory support company that offers full-service support for our clients in the early stages of their regulatory pathway as they're bringing new products to market. Something that we offer in addition to our full service support is our regulatory due diligence program. It's where we provide startups with the tools they need to prove their regulatory readiness to investors and help secure those deals faster. So we're here to provide a regulatory perspective and offer our assistance where we can.
Great. Thanks, Christina. And with her is also Russ Rogers of Corto. Russ, can you tell us more about your background and yourself and fill in any other details?
Yeah, good afternoon. As Hall said, my name is Russ Rogers. I'm the president, one of the four founders of Accordo. We're based out of Richmond, Virginia, but we have people all over the country. We primarily focus on med device diagnostics, bioscience, that sort of thing. We don't typically get into detailed pharma applications, but we do have partner companies that we work with when those come up. Happy to help, happy to answer any questions, help you folks understand what the regulatory requirements are going to be that you're going to need to follow to get to market efficiently. So happy to help. Thanks all.
Great. Thanks you guys for joining. Our first presenter is going to be Lance Strakiel of PRINT3D. Lance, if you're ready, go ahead and launch your slides and kick off when you're ready.
All right. Hi, I'm Lance Strakiel, co-founder of PRINT3D Technologies. And as you can see here, America has a real problem. We're short 7.3 million affordable homes, and we are only building 1.4 million homes per year, of which only less than 10% is focused on affordability. Construction costs are up over 30% in 5 years, and the industry is stuck in the past, and people are struggling to find a place to live. At PRINT3D Technologies, we are solving this problem by disrupting the construction industry. We're doing that by bringing automation, AI, and 3D printing to construction to make it more affordable, sustainable, and scalable. But before I tell you how we can do that, let me tell you how we got here today. I've seen firsthand how inefficient the construction industry is. And several years ago, my family unexpectedly lost our home to mold. And when we went to rebuild, it took twice as long and went 50% over budget. And I couldn't help but think, if it's this inefficient and expensive for me, how much more impactful is that to people that are struggling to find a place to live that's affordable in the first place? The reality is the system is broken. And when there is a broken system, there's an opportunity for innovation. That's why we built PRINT3D Technologies, to solve a real market failure. Here's me and my co-founding partner, Craig Pettit, outside of one of our 3D printed homes. For over 30 years, my family has been invested with Craig in his residential real estate portfolio. And in 2019, he bought a 3D printer, and he was successfully printed the 7th and 8th 3D printed houses in America. As a third-generation owner of a manufacturing business that's highly focused on automation, I became fascinated with this technology. Through my experiences building homes, the inefficiencies in the construction industry were shocking to me. Coming from manufacturing, where efficiency and precision are a starting point in the industry, I was shocked by the complete lack of these principles in construction. That frustration sparked an idea. What if we could apply a manufacturing mindset with automation, robotics, and AI to disrupt the housing industry? I shared my vision with Craig, and he immediately saw the potential. We had the perfect combination of expertise, his real estate background, my manufacturing expertise to tackle one of the world's largest challenges, affordable housing. So in 2023, we made our move. My company, All Metals Fabricating, invested $750,000 to match what Craig had put into that date, and we launched PRINT3D Technologies. Our mission is simple: revolutionize construction to make it more affordable, efficient, and sustainable. We're not just building homes, we're manufacturing and selling the machines that will help builders all across the world embrace this new technology. So let's understand the opportunity. For over a century, American homes, I repeat, over a century, American homes have been built the same way, with wood framing, labor-intensive constructions, and it worked. It fueled the economy, supported growing families, built communities, created the American dream. But sadly, that dream has slipped away due to rising costs of skilled labor shortage and material costs, compounded by the industry's slow adoption of new technology. As you can see from this graph, rents have outpaced incomes for decades now, and it's quite startling. Here we can see that average home prices are up more than 100% since 2000, while wages just simply have not kept up. Construction costs are up 30% in just 5 years, and we're going to see that even go up even more with the surges that we're about to see from tariffs. And the industry has been forced to use less skilled workers, inferior materials to lower costs, which leads to a decline in the quality of housing. This graph just shows in the last 10 years, the amount of people being able to afford a home has dropped from 50% down to 16%. This is a massive issue. And we have a solution. Has anyone seen a 3D printer, likely desktop size? Just scale that up to the size of a house. And you have our patented 3D home printing system right here. It works like an ice cream dispenser in that except it dispenses concrete, and it uses G-code, geometric code, to tell it where to go and what to print. So what differences does our solution offer? We can provide a 20% savings for a wall system that far outperforms traditional building methods. Our houses are mold resistant, termite resistant, fire resistant, hurricane resistant, and tornado resistant. Especially relevant given the recent fires in California. There's one house left standing. It was concrete. In Malibu, there's one house also left standing in Hawaii several years ago. It was concrete. Granted, they weren't 3D printed, but it's the same material with the same sustainability. We can also provide a 30% time savings versus standard construction methods. Time is money. And so with our wall structures, we're removing framing, sheetrock, masonry, paint, and insulation. With our future plans, we believe we can expedite these time savings to even closer to 50, 60%. Next, precision construction practices reduce waste significantly. The proper combination of precise planning with recycled materials and the use of a long-term durable project of concrete will reduce landfills significantly over time. Lastly, 3D concrete housing reduce ownership costs. Starting with the walls, they're more energy efficient, reducing energy bills. They're also much more durable. So damage to the walls and just the structure in general, it's just a lot more durable of a house. So what is our competitive advantage? It starts with our partnership with All Metals Fabricating, which I own, is a world-class manufacturing facility shown here in the picture. This vertical integration gives us full control over production, allowing us to cut costs and engineering of the printers we sell, demonstrated by the fact that our current model costs about $175,000, and the most comparable one on the market starts out at around $1 million sales price. Through this partnership, we can actually scale up production to meet any amount of demand that the 3D home printers could create for us. So scalability is no issue for us. Combining our real estate experience with data-driven insights and approach will allow us to streamline home construction nationwide. Next, PRINT3D has inherited an expertise in efficiency, focus, and automated approach to construction through our partnership and expertise at All Metals Fabricating. So what have we done? 2019, we commenced business. 2021, we printed the 7th and 8th 3D printed homes in America. Since then, we've printed 5 structures, including a house for $100,000 last year. We've designed and built 2 of our 2nd generation machines, patented as well. Top 10 worldwide rating for automate construction and top 5 for 3D home printing. We developed an augmented reality app that allows you to walk through our homes, place them on any coordinates and walk through them, which we also look to utilize this technology to train trades and builders with our technology. We've also completed a rebranding and launched a marketing campaign. And then this year, we received our patents back, granting our patent. We've developed a sales pipeline with $2.5 million in it. We've invested $1.5 million to date, and we recently won 3D Home Printing Company of the Year by Construction Tech Review magazine. With all that we've accomplished, we feel very confident in raising $1 million at a discounted $8 million valuation and a second tranche of $2 million at a $15 million valuation to achieve the following. First off, develop a proprietary software that will allow us to take architectural renderings, whether it be 2D or 3D, drop them into the software, and it automatically create the G code. This will allow scalability for any builder to take any plans, create the G code, and also give them a cost estimate for the job. Also creates a SaaS revenue stream for our business. Next, we're going to invest in a R&D of a development of a printed brick style print head that will allow us to appeal to traditional architecture models. A lot of the prints you see out there have the beaded look. We want to be able to do a brick style look that will appeal to the mass market. Also allow us to more automatically and efficiently achieve a smooth wall finish as well. Next, we're going to hire a dedicated R&D team to support ongoing innovation so that innovation is not slowed by construction jobs. And then we will build additional machines to be able to take on large-scale development projects and allow for sufficient stock for machine sales. So here's some very conservative numbers that we've developed. So 2025, these revenue numbers are based on both structures printed and machines sold. So 2025, 9 structures printed, 2 machines sold. 2026, 40 and 8. 2027, 75 and 24. 2028, 125 and 48 structures. Now, I will mention that market adoption by builders could exponentially increase this growth curve, and all metals fabricating would have no problem keeping up with the capacity. We plan on selling these machines for $400,000 with a cost basis of $175,000. So, for example, if we sold 100 machines instead of 48 in 2028, then that would boost revenue by $20 million and profitability substantially as well. Now, I want you to imagine this. I want you to imagine a complete community with 20, 30 printers out there printing these houses, 2 people operating each machine, and then a house in a box being delivered for each house, which includes everything that you could need for that house: HVAC, doors, windows, cabinetry, appliances, everything, allowing the trades to get in and out of the house very quickly. And then a family like this one moving in after 3 months, happily at a very affordable price. And with this type of solution, we can change the trajectories of affordable housing. This is more than an investment. It's an opportunity to fix a broken system and transform the future of housing. We have the technology, the expertise, and the urgency to make home ownership more accessible while building a high-growth, scalable business. The need is massive, and the time is now. Will you join us? Thank you.
Thanks, Lance. Great job. Andrew, what's your first question?
So with the sales of your machines to other general contractors, I assume, what is the relationship of the liability of these kind of machines breaking down? Is there an ongoing kind of service or maintenance that you provide? Do they have to keep you on retainer? Yeah.
That's a great question. Yeah. So I have the privilege of purchasing, $1 million plus machines as a fabricator. So I'm very familiar with this relationship. They generally come with a 1-year warranty and then a 2-year warranty on electronics. So we would be offering the same, and it actually becomes a great revenue stream as well for service techs. So we would have a service tech arm, and that would create, both spare parts and service techs. So we'd be servicing these machines, which would also create a lot of revenue, which is not reflected in our projections.
Okay. Yep. Thank you so much.
Yes, sir. Thank you.
Russ, what's your question?
Yeah, related to the applicability of the technology regionally in the U.S., is there any supply issue with the concrete regionally, or any issues there?
So we buy, so there's several different ways to do it without getting too technical with you. We're using a mix, which is actually the highest cost method, but it makes it very accessible and also puts the liability on the concrete company that's providing it. You can also use a mini batch plant where you're bringing in different materials and mixing them on site. That's we actually look to develop that with the Gen 3 as well. I didn't mention that, but that will reduce operational costs. All of this is very available. You would maybe have issues in like remote countries where the rural areas of a remote country. For example, we're looking at Australia right now. They want to do some development in some very rural areas, and so there could be challenges in that situation, but not the United States that we've seen.
Great. And you kind of led me into a follow-up question I had. You mentioned patent protection early in your presentation, then you started talking a second ago about Australia and other global regions. Is your patent protection pretty broad?
It's yes, for the United States, we would need to apply for, if we were selling machines there, we would need to go apply for patent protection there as well.
Thank you.
Yes,
So, a
sir.
question from the audience, just what parts of the home can be 3D printed?
So currently you're just looking at printing the wall structure. So there is ways to print the roofs, and but we do believe that will come in the future. There's an aesthetic component to that as well. But right now it's just the wall structures. Hence why you can only speed up the construction time by 30%.
Okay. And have any major home builders adopted your technology yet?
Well, not partnered with us yet, but yes, Lennar has partnered with Icon and done several developments down in the Austin area. There's another development going down. I'm not sure who the exact builder is with Hive 3D down in Houston. So yes, sir, we're starting to see momentum. Municipalities are the bottleneck right now because they don't know how to inspect the plans, much less inspect the print. And so creating a standardization where municipalities can embrace this technology is the key that's currently, preventing mass adoption.
Great. And can you print multifamily dwellings as well as single family, or is that on plan?
Yes, we've got we actually have some models. We have, I didn't mention it, but we have a handful of model homes as well, and models created duplexes. You can print basically anything. It's just what's most efficient. And so once you start moving the machine, you kind of start losing some of that efficiency. But yes, we can print multifamily.
Are there any subsidies that come into this that speeds up the output of homes?
Any subsidies? What do you, what is an idea?
Housing subsidies, grants from the state
Oh,
or the
yes,
local
yes. We've
governments?
just started. Yes, thank you. We've just started exploring that, especially in the affordable housing sector. But it's still hung up in municipalities, them embracing the technology. So until we can tap into that, but yes, there is money available to help. And those are also not reflected in our numbers.
Oh, okay, great. We're at the end of our time. Thanks so much, Lance, for a great presentation. For those in the audience, please put your answers into the chat box or into the poll there for interest as well. And with that, let's move to our next presenter, FIntegrate.
All right, hopefully you're seeing the screen.
You're good to go.
All right, thank you, Hal. My name's Chris Bishop. I'm CEO of FIntegrate Technologies. We focus on collections and recovery in the banking and community bank and credit union space, as well as dispute management, and then data migrations for banks going through mergers and acquisitions. So our goal is to really automate fully the collections and recovery process from start to finish, and then make banking dispute management for fraud and other types of transactions a completely automated process. Today, there's about 9,500 banks and credit unions in the country. Primarily, believe it or not, most of those guys use an outdated technology, at least 20 years old, for collections and recovery. And many of them even use spreadsheets for that same process, or for fraud and dispute management. So our experience in automation and integration with banks and credit unions is going to lead, or has led us to automating that entire process from start to finish. And it's, in doing so, our banks have said it's coming off a spreadsheet. They reduced their workload and their manual processes by as much as 80%. So we have 3 applications in the market today. Fusion CRS for collections and recovery. That starts with a pre-delinquency risk scoring model to kind of predict with a degree of accuracy who's going to be delinquent. And we follow that all the way through the journey, all the way through to post-charge-off asset recovery. We have a shadow accounting system built into CRS that helps the banks then categorize their expenses and their charge-offs to better improve their bottom line. But along the way, we automate the process. There's many steps involved there for customer interaction, for click to pay, for texting, for integrating with their core system to post payments and accounts, things like that. So Fusion DMS for dispute management, that's for fraud and dispute management for checks, credit cards, debit cards, any type of a fraudulent transaction. The customer can come in, make a dispute of that claim. Provisional credits are posted to their account. The research is done to determine if it's a valid fraudulent item or not. And then they reverse the decision, or they continue to keep the provisional payments. We automate that entire process from start to finish. And today, many of the banks, believe it or not, under 15, $20 billion in assets are using spreadsheets for that process. And Fusion LRS is the business we've kind of been in previously for data migrations and data conversions. That's the automation and integration that we've built two previous companies on for banks that are going through an M&A or a core system transaction. So it's all three products then are playing for access and integration, but also for compliance rather in their integration. Our goal with some of this, we're starting an AI initiative later this year, and then we'll ramp that up through the end of 2027, 28, and 29, really to make the entire process an automated process through using the data and chatbots and the AI piece. Today we're using machine learning to do some predictive analytics, but really to take that to the next level with AI integration. We're starting that again, beginning of this year or the end of this year. Our total addressable market, we have customers today in $200 billion in assets, all the way down to 250 or $100 million in assets for credit unions. But really, we focus our sweet spot is between 10 and $20 billion in assets, down to about $150 million in assets for all three of our products. So that leaves about 5,500 banks and credit unions in that total addressable market. Here are some of our current customers on the left-hand side. You can see some of the banks and credit unions that are running one or more of our products. Kind of the product mix there in the center. We created the Fusion DMS about 18 months ago for the dispute management and to automate that process, and that's had a really good, we've had really good traction with that. And then the Fusion LRS was the business we had previously. We'd sold one of those to Jack Henry and Associates, and one to a later on 4 years ago to a company that's owned by private equity. The guys on the right-hand side are some of the biggest core players in the market that either resell or refer our products and services, because these big companies don't have a collection recovery. They don't have a dispute management product that's a full suite product like we offer. So it's good to be, we've been in this industry for 25 years, and we still have great relationships with all of these companies to be able to resell or remarket our products and services, or even refer us business. Our management team has been, many of these management teams, some of our employees have been with me through the last 2 or 3 companies. Jason Alfano, our CTO and co-founder here at FIntegrate, has been with me the last 2 companies as well. Jeff and Terry have both had previous exits from their own startups or their own companies. So our management team and employees have invested about $1 million, and we've augmented that with the raise initially of about 2.2 from just friends and family. The list of the successful exits I've had in the past there with my other previous companies. Again, we sold some to public company and then to a private equity group. Ray, I'll let you take it over from here.
Hi, everybody. Can you hear me okay?
Yes, we can.
Thank you. So I'm Ray Martin, and I'm an investor in the company. I was a founding investor and third largest shareholder in the company, and I'm helping them with this, helping Chris and the team with a financial raise, but I'm not a manager in the company. Just as a real brief financial summary, we've had revenue since 2021. That's because we acquired a business called Fusion CRS, and that's the collection that's the collection application, software application that Chris talked about. And then we've built onto that. We've built customers onto that, and we've built on the dispute management application, and now we're doing Fusion, the M&A stuff, activities as well. So another thing I want to just call your attention to on the historical side, the EBITDA is negative, but embedded in that EBITDA are about $700,000 in cash payments to the sellers of the platform that we bought in 2021. So we were actually positive EBITDA in 2024 if you adjust that out. we've got a detailed historic financials. We got a very detailed financial model. Happy to take, interested investors through all that. And basically, we expect to have 50% margins over the next 5 years. We don't need a huge percentage of that 5,500 customers. We need about 350 or 400 customers to get to a pretty big number in terms of revenues. So next slide, please. So with this raise, it's a convertible note, very traditional terms, 20% discount, post-money valuation, 3-year term, 7% interest, and minimum investment of 100, but we would waive that and do lower. Use of proceeds, most of it is going to sales and marketing and a little bit more to software as well. And then that working capital, there's probably some money there, more software towards the end of the year on the AI side. The key here is we've got a good management team in this company. We really need some foot soldiers to come in and help us attack that large addressable market. And dispute management is very early in that market, so we think we can do a lot of get a lot of new customers in there. And the collections business, most people already have something, and we're replacing that. But we've got a very robust platform with a lot of good reference clients. So we're really ready to spend some marketing dollars and some dollars on salespeople and get out there and really tackle that addressable market. Next slide, please. So possible exit scenarios. If you look at it, basically what we need to get to is $3 million. That's kind of the threshold for companies to look at acquiring you. And you can get kind of a 8 to 10 multiple when that happens. I'm just showing smaller multiples, 5 to 8. And with $1 million convert investment, you can do pretty well with us. We think we can hit that $3 million number in the next couple of years. Aggressively, we think we can hit the $5 million number in 2026. But that's really where there are 8 large software aggregators. There's some competitors of ours that we think would be interested in acquiring us. We've already had 2 conversations with competitors who are interested. And there's some adjacent software providers who just want to add another software platform with some bank customers. Coursers look to acquire companies, and of course, there's private equity. Last slide. So just to sum up, we had good revenue growth, very proven software. You got 94 customers. People are happy. They're on 5 to 7 year contracts. We're really poised to do AI. The banks aren't ready for it yet, but we're going to be building that over the next couple of years while we go out and tackle and harvest this large addressable market. Management has had 4 previous successful exits, and we've got the addressable market we talked about. Management has $1 million in cash invested, friends and family of 2.2, so a total of 3.2 invested so far in the company, and we've got some pretty strong exit prospects. I'll also add that we've of the $1 million, we've raised 170,000. We've just been at this for about the last 45 days. We got 170, and that was from friends and family of ours. And we've got we made it through to the on the Baylor Angel Network, and Chris is presenting there on Friday. We were 4 out of 20 that applied that made it to that level. So lots going on. Happy to answer some questions.
Great. Thanks, guys. Russ, what's your first question?
Yeah, could you help me understand your product pricing? How do you work that?
So today, the product pricing is for the DMS product is a SaaS-based pricing model that's based on the asset size of the bank and not necessarily the number of disputes that they have. The collection and recovery module is based on a combination of asset size and the number of users that would actually be using the system. And then collection or the Fusion LRS for merger and acquisitions is based on an asset size plus the total terabytes of data to be converted.
Okay, thank
So,
you.
Can I give an example, Chris? So, you know, we sold Fusion CRS last year to a $200 billion bank, which is kind of outside of our view. And that license fee was about $200,000. When we sell to a bank that's got 500 million in assets, it's kind of more in the $25,000 range. Chris, is that right?
Yeah, it's probably 35, 40, but yes, a lot
35,
lower.
40 in that range. That might help a little bit. So we scale up with the amount of assets that the company has, that the bank has.
Got it. Thank you.
Great. Andrew, what's your question?
Yep. So you guys mentioned the usage of an LLM. I wanted to understand if this AI bot is who the end user was. Is it to provide analytics to the bank and then transactions, or is it also repurposed for the end user, i.e., the bank user, to understand what transactions and collections look like for their private accounts?
Great question. So it's going to be both, right? For the collection and recovery system, the majority of that, as we've mapped it out today, is going to be for the executives and for the banks and the back office users to do the analytics for their portfolio holdings. There'll be some part of that. If you think about the collections journey, you know, with texting and analytics available to the end user, you know, you might be able to text or interact with them on a different level, maybe a micro loan or some other type of product the bank might have to offer. For disputes on the dispute management product, it's probably going to be more end user facing, right? About the questions, the AI, the interaction, because there's a lot more fraud that happens on the dispute management. But a lot of times what we're learning is that leads into delinquencies, right? And then charge off. So if we can get it started, catch it up front, and then ask the necessary questions through the chatbot and through the AI interaction, we can then get a lot more productive analytics out of it.
Gotcha. And then just follow up on there real quickly is so just my mind went straight to cybersecurity, right? So who's monitoring these LLMs and where the data is being stored, and does that change pricing from bank to bank? So for example, if we have bank A that's like larger, they have a bigger IT department, they take on the challenge, or does that alter? What's the process there, and who's responsible for that data?
So today, all that data is the responsibility of the bank. If it's on-prem, you know, they're managing the security, the access, the compliance of all of their data. Our goal would be to get this data anonymized and into a consortium type arrangement so we can start doing some, you know, have 200 or 300 banks where we can analyze non-specific, you know, personal data for patterns in fraud and collections management for a bank of certain size or geography or certain types of patterns of fraud.
Gotcha. Okay, thank you.
Great. Christina, what's your question?
Sure. So you said a lot of your clients are still working on paper and on spreadsheets. So could you give me a little bit more information on what your typical onboarding process looks like, how long that takes, and if you're seeing any pushback on adoption from those that are set in the spreadsheet ways?
Surprising, right? That $20 billion banks are using spreadsheets, but they are. So if you have a credit card, debit card dispute or check fraud dispute, they're tracking this with spreadsheets. The Federal Reserve comes in, or the OCC, whoever audits them, finds them, that type of thing. So the pushback we're really seeing, if I'm being honest, is from the back office staff not wanting to change the way they've always done it. The CEOs, the finance guys, they get the automation and the integration, and they're all for that piece of it. But it's more in smaller banks or in smaller towns and communities, you know, you've got a lady that's been doing this spreadsheet for the last 20 years, and there might just be two people back there doing those spreadsheets, right? You get a large bank, they have more integration points, they have more access points. They really want to do the automation to streamline their processes. So it's a little bit of both.
Perfect. Thank you.
Great. And that's our time. Thanks so much, guys, for great questions and great answers there. Let's bring up our next presenter. We have with us Mike Areen from GridMatrix. Mike, go ahead and launch your slides. You can go off when ready.
All righty. Well, congrats previous presentation on Baylor Network. We will see you there on Friday.
Awesome. Thanks. I look forward to it.
Yeah, so I'm Mike Green. I'm the COO, co-founder of GridMatrix. We are in the infrastructure AI space, and by infrastructure, I mean critical infrastructure such as ports, airports, and highways and intersections. So we sell to infrastructure operators such as port authorities and then local municipalities and transportation directors. What does our product do? So we are a SaaS company that sells software that allows these operators to plug into their existing sensors, primarily their existing cameras. So the founding story was that our CEO and founder came from Apple, and he wanted to build essentially an iPhone for intersections. He noticed intersections in other parts of the world were operating more efficiently. But when he went around and talked to a lot of the potential customers, they all said the same thing. They've been buying hardware for 40 years, especially cameras. They just want to make those sensors work. They want to turn those dumb sensors into integrated smart sensors. And so that's what we built, a platform that plugs into existing sensors, turns that into data, and we charge on a yearly subscription fee. We're cloud-based, we're scalable software. We already have 9 large customers. Our last year revenue was $550,000, and we're projecting $3 million for this year. The general market that we're playing in and disrupting is the civil engineering market, dominated by large players like Jacobs and AECOM. We're coming in as a software-first company, much like Palantir did in the intelligence industry. We're based in Austin, Texas, and our lead investor is 8VC. We're raising a follow-on bridge seed round that we've closed $2 million of. We have $1 million in room, and I'll go through the round details later in the presentation. What's the problem we're solving? These infrastructure operators have a lot of questions that they need data for, but they don't have any way to turn their existing environments into data. So we solve that problem for them. They have specific questions that they want to answer. How often do vehicles idle more than 5 minutes in the departures curve? Can you give me an alert when a boat comes or leaves a port? What are my most dangerous intersections? What can I do to improve these? I want to actively manage which way a lane travels during rush hour. All these things seem like pretty rudimentary things that a operator would have access to in kind of the year 2025, but surprisingly, most of them don't. They've been slow to embrace analytical technology, and we're kind of a bridge that can bring them into the 21st century. So again, going to the solution, we're hardware agnostic. We plug into any sensor you might have, and that includes cameras, which we use computer vision on. It also includes inductive loops, radars, LiDAR, any sensor that you already have. And we are specifically built, and our algorithms are built to serve the infrastructure industry. We essentially take those streams of those sensor beams and turn them into physical grid data and serve it back to them. And we do that on both a real-time and a historical perspective. So you can imagine if you were to give us access to, let's say, 20, 30 cameras around your city, we can tell you after a couple weeks where your most dangerous intersections are. And we can also tell you, compared to other intersections around the country, how yours are being operated in a way that are making them dangerous or making them experience higher traffic delays during rush hour. And again, our tools and our solution and our front end and our API are designed for large enterprise-size infrastructure operators. Here's a video of us in use in one city. Oh, hold on, I need to turn off the volume.
Changes that might need to be made to make the road safer. Fox 35's Chris Lindsay explains how this new technology works. Reduce fatalities and serious injuries down to zero. That's the goal.
The video concludes that we're helping Orlando optimize their traffic and their safety. Just to be redundant again, because it's a bit of a confusing product, we're taking in streams and information. All we need is an IP address. We're using AI cloud processing, converting that into anonymous physical data, a data set that's just showing objects moving through space. And we serve that back to the customer in an API and a web dashboard. The slide is meant to show that basically the more customers we get, the more data we generate and the higher ROI we can generate because of the data set. It's also a good time, although I don't tend to talk about it. One of the larger ideas of this company is, as we develop this data set, it has many monetization uses. There's a lot of companies that we've already been talking to that would love to get their hands on a data set that's showing how things move through infrastructure and space, especially autonomous vehicle companies and insurance companies are particularly interested in this data set. Here's a current use case at Dallas-Fort Worth Airport. We're plugged into several of their cameras to analyze their curb use, analyze traffic patterns, reduce emissions, send alerts and notifications. And then we also have cameras facing the airport side, managing their fleet vehicles, cargo visibility, security and threat detection, and sending alerts and notification. We're also at the New York port. Our largest customer is the Port Authority of New York and New Jersey. We're doing similar things to Dallas-Fort Worth, mitigating truck queuing, reducing emissions, and what's now a new use case and becoming a very popular niche for us, monitoring vessel tying in off and sending alert notifications when boats come in and out. We have 9 important paying customers. That number should double by the end of the year. We also have state whitelists, which allow us to skip the very long and arduous RFP process and sell directly into customers. Texas DIR in particular is a very important one that you can use across many states. So you can actually go into customers and single source your software as opposed to going through an RFP process. Projections, again, 3 million next year, 5 million the year after. I need to update the slide. And our contract size is going to grow to under 100,000 to well into the mid 100,000s. In general, these customers, you kind of have a POC contract that is about 20 to 80K, and it includes about 10 to 15 sensors. And then the next contract can be 100 to 200 sensors and up to even $1 million value as we get into larger deployments. We have a well-verified large pipeline that we're going to convert into that $3 million ARR this year. Half of it's through new opportunities and RFPs, and half of it will be expansion renewals of existing customers. The number of opportunities that have occurred in the space have like doubled or tripled every year since we started. We found about 10 RFPs in our first year that would want our software, and that number is probably going to be a couple hundred this year. If we had the capacity, we could apply to about 3 or 4 of these every week. Again, the TAM we play in is we're disrupting the civil engineering market. We're doing it with a data-driven process, a software-first company, as opposed to a kind of an old consulting model. These are also likely acquirers in our space, especially once we start stealing more and more business for them. We've already heard from a couple of them. They're interested in finding out what we're doing. But essentially, we're taking the Palantir model, which is to build a software-first company in a space that's been owned by consultants. It's just showing the hockey stick of smart data companies that play in the sensor market, and we are hoping to experience that growth and valuation. The team, Nick, who will be at Baylor on Friday, came from Apple. Before that, McKinsey. I'm actually the more experienced one. I've been in startups for 15 years. I'm not gray hair, but I'm losing my hair. Before that, I was a quant for hedge funds. Our Eric Valsik's our head of engineering, very capable guy. He comes from Nato, which essentially did computer vision and cameras for auto OEMs. And concluding with the round in dynamics, it's a 9.2 million pre-money valuation. We're looking to raise 3.3. We have 2.4 closed. It's led by AVC. Our board includes Alex Moore, who's also on the board of Palantir. They could be potentially another acquirer. I'm happy to introduce you to him if you guys have interest in the deal. Conclude there.
Great. Thanks, Mike. And Andrew, what's your first question?
Yep, I'd love for you to shed some light on how deals are structured regarding the data. Is it owned by you, the company, or the client whose hardware you used?
Yeah, we kind of think of it like the Netflix subscription model. They essentially give us access to the cameras. We convert it into a data set, and then we give them access back to that data set on a subscription model. So they can pay for as much data as they want from us, but we own the data. So we're able to build a data set and own the data set.
That's incredible. So theoretically, you could take that data and then sell it to different clients.
Correct, correct. Yeah, especially as the data set becomes larger, it's very interesting. Another thing that your question proposes that one thing that we might eventually do is actually partner with people who want to buy the data before we even roll out with the city, and then they can essentially pay for the city's rollout, so it becomes a revenue generator or revenue neutral for the city. And anyone who's sold in the government knows it's much easier to sell into them if you're not charging them anything or if you're actually giving them money, which is why a lot of the parking and curb use and law enforcement companies have done well, whereas some of the companies that are charging money, it takes a lot longer to experience success in that industry. Great question, though. Thank you.
Hats off to you, sir.
Thanks, Andrew.
Great. And Christina, what's your question?
Great. So I really wanted to tag on to Andrew's question. You're talking about monetizing those data sets. What does your timeline look like for when you think you would be able to implement that part of your revenue stream?
Yeah, so I think like we have some like pilots proposed where we're doing the model where an insurance company is going to partner and kind of prepay for a sample data set on behalf of a company. I think that will happen either in Q4 or early Q1 next year. In terms of selling the larger data set, that will occur when we have a couple of large cities with a few hundred cameras. New York's the most likely the first one to do that. So probably getting to that point, that would be later in 2026 when we're starting to monetize directly the data set where we have an existing data set and are selling it, as opposed to like a live deployment where we're selling it on an ongoing basis, if that makes sense.
Perfect. Thank you.
Yep.
Great. And Russ, what's your question?
Yeah, during your sales process, what do you see as the most common reason target clients decide or opt out of adopting this? I mean, clearly this software is addressing a key problem we've got, and that is you can't just keep building bigger and bigger infrastructure. You've got to make it smarter. So why don't target clients adopt this?
Yeah, so a lot of our business is done through RFPs. So the most common reason we don't win an RFP is because the city is more comfortable paying a more well-known large consultant, like the ones I mentioned on the civil engineering tab. They're not yet ready to deal with an early stage startup to solve the problem, even though we're proposing a much better price. So the solution there is that we'll start forming partnerships with some of these engineering firms so that we can take off the software slice and win more opportunities that way. That's the most common. Another one is that they actually, they're looking to spend a lot more money and put in new hardware. We do have deployments where we produce hardware, and we can obviously suggest the best hardware since we're not selling hardware ourselves. But a lot of times, hardware first companies can win some of the RFPs that we're submitting for.
Thank you.
Yep.
Great. And my question, Mike, is you're winning a lot of bids in some of the cities. What's the most common reason those cities are choosing your solution versus the traditional consultants?
Yeah, so it's something like our average, we can charge basically 70 to 80% less because, again, just like the Palantir model, we're a software first company. So like we've already produced the software. We don't have to hire some other software company to write software for the solution. And then versus hardware first companies, we don't require them to install new sensors. So that's actually our number one selling advantage is we can take their existing cameras and let's say a camera to install an intersection is something like $25K, but we're charging $5K if you already have a sensor. We can plug in and turn that data smart. Or that camera smart. So that's our real selling advantage. We don't require new hardware.
From the time they sign up to the time it's deployed, what's the average setup time for that?
Is that me? The average setup time is to get plugged into their cameras is about 2 weeks, and normally it's 90% of that's getting past their firewalls and working with their IT company, and then kind of getting them spun up and getting them their dashboard it's about a month total.
Oh, wow. Okay, great. We're at the end of our time, as that music told us. So thanks for a great set of questions there and great presentation, Mike. Our next presenter is Frank Sid of Aether. Frank, if you're ready, go ahead and load your slides and we'll kick off when you are.
And thank you for having me. Hall for, I think, the third time at least. So
yeah.
And I will start by saying that our company is actually now public. We're trading on NASDAQ. To give a little bit of a background, my partners and I, we actually were initial investors into the business. We're on your side mostly in the VC space, focused on helping our companies go to NASDAQ in a faster than normal fashion. So that with that being said, I will start this presentation. The company is called Aether Holdings. Legalese here, so we'll just go quickly through that. And Aether, at the heart of it, for us, what we're building is a financial fintech platform. We offer proprietary research, analytics, data tools. We have customers already in place that are primarily in the institutional and the trading world. Our mission, what we're building with Aether, is to empower investors. What we saw was a really good business with Sentiment Trader. That's one of the wholly owned subsidiaries of Aether. That's what this started all. They initially started this company and they went after the hardest people to go after, which is institutions and trading houses, family offices. They've never really focused on that retail investor. So we do have data processing tools, research tools, market analysis. We have strategic insights into the markets. And again, I reiterate, our goal is to empower investors. I believe that what we have is about 20 some odd years of data with Sentiment Trader, specific to sentiment analysis. We have cutting edge AI-driven fintech solutions that we are tailoring to be more easy to use for investors. Currently, power users get it. They can go right into the system, grab the API, take what they need, tailor it to their needs, but we really want to make this into something that everybody can use. This is basically a history of Aether. Well, initially, Sundial Capital, that's what it started out as. They launched their newsletter, Sentiment Trader, in 2001. Then they launched Sentiment Trader 1.0, which was effectively when they started targeting the clients. In 2010, they relaunched as Sentiment Trader 2.0. And I'll skip right to the 2020, which was the launch of the Sentiment Edge report, something that's more of again, a more consumer-focused newsletter. They did amass a pretty decent amount of subscribers over that time. They also have been able to create a ton of indicators. We own about 3,000. 15 of them have been bought. The others have been basically created by our analysts. And this current iteration, what we have now, is when we came in and we are rebranding as Aether. So Sentiment Trader is a big part of this. 28 Ventures, which was, it is the firm that I'm a part of 28 Ventures and Monty Financial Group. We partnered strategically in order to take out Sentiment Trader, buy it out, and create what we have now, which is Aether Holdings. We did launch something called the AI Smart Stock Scanner, and we are getting ready to launch a ton of other new tools, which I can't speak too much on in this, but give us a few weeks and we'll be able to say a lot more. So I'll leave it at that. Sentiment Trader is really, it's a study of the markets. If you're active, the markets are about sentiment. It's about the crowds. What are people going to do? And markets are violent, they're volatile, and sentiment analysis is definitely a huge part of it, whether people want to think it works or not. So we have found over the last 20 some odd years that our tools are pretty good. We have the back test indicators, we have different strategies that you can use within our system. And this is what it used to look like, Sundial Capital Research on the left, and then on the right, you see what it looks like now. And we are constantly improving. My partners and I, everybody involved in this company, we are capital markets guys. We understand the market. We know that the best way to get traders, to get retail investors, make it easy. Yeah, there's a lot of quants and certain people that want to go in and kind of break everything apart. At the heart of it, most people just want to get a really solid report. They want to have quality and they want it fast and actionable. So as we build out the system and as we build out tech, that is what we're going to be doing. Right now, these are the main product lines that we have. We have the reports library, again, extensive, many years I think about 20 some odd years of reports. Trading Edge Weekly, Sentiment Edge Report, Cappell's Corner, which is one of our analysts, Model Edge reports as well. Our technology, which again, we're constantly improving and building, and we think we're going to come out with some really, really cool stuff. The Data Edge API, as I said, some of our users are pretty much power users. They're the who's who of the trading world. They don't want our data. What they want is to get or rather, they don't want our UX UI. They want our data. So they just get access to the API. We charge them, and they build what they want. We have the backtest engine, the smart stock scanner, indicators and charts. We have 3,000 plus sentiment, breadth, and seasonal indicators. So basically, what we're looking to do is expand. I think this particular page doesn't really explain much of what we're trying to do, because 2025 and beyond is really about taking this data and also adding the data to it, taking our newsletter subscribers and marrying this to the future, which is AI. We're actively creating tools. We're building stuff that is going to lend itself to all the data that we do for us and for our customers to get the best insights and to get it quickly and actionably. So the current revenue model, these are the different price points that people can come into. Individuals currently can charge between $59 to $139 a month, $590 to $1,300 annually. Most of our subscribers are on the high end. They're on the 1,300 plan. Also, the enterprise plan starts at $10,000 a month. And we do have, like, Temasek is one of our clients. There's a bunch of really, really great companies that use what we have. So industry overview, the industry is huge. Everybody here, again, is a part of it. We are all very much tied to this industry. And, the market is massive, trillions, right? Also, I think that there's one thing that this is not drilled into, because we tend to not think about it as much, but the newsletter business is massive. If you consider ChatGPT what it really is, and no offense to OpenAI, but what it is really a very glorified, strong newsletter. They have 100 million subscribers that pay well, not all, but a good portion pay $29 a month. Having that recurring revenue allows you the breadth to create new stuff, fail, make things work, run with good things, and really get that actionable data of what is working and what is not. Our newsletters, I think, are actually as valuable as the technology, if not possibly more so, because our subscribers are really what is going to be driving us, and that data that we get from them is going to be huge. And I'll say, imagine having, imagine having 1 million people where you know exactly what it is they're looking for. That is very valuable. So again, current and future plans, we want to accelerate the U.S. retail participation. Right now, we have a decent amount of subscribers, but I know that we can really ramp this up, especially as we add more newsletters and use that to convert those newsletter subscribers, free or paid, into users of our other tools that we're building and that exist. We are shifting from a little bit of what they've been focused on with again the institutional investors to a retail investor. I think this is, if we can drill down and get it right and make this into something that's very easy to use, I think that the Robinhood investor, the Moomoo investor, all these people that are out there trying to find a way to find the best tools, I think that at the end of the day, we can capture those. So I'm not going to get too much into it. If anybody wants a deck, I'm happy to get it. I'd rather go right to the questions. These are some key statistics that I will kind of close off on, so we can get to questions and if anybody has any. But yeah, we have over 3,000 plus indicators. We have an operating history that's pretty extensive, 20 plus years. Our total subscribers right now are about 25,000. We have about 1,500 paid subscribers. And our email open rate is tremendous. We have a 45% open rate for both free and paid newsletters. Click-through rate is pretty decent. Industry standard is 5 to 7. We're at 15%. About 250,000 active social media followers, which are just ready for the taking once our sales team that we're putting in place can take over and start converting them. And also we plan to grow through strategic acquisitions. Now that we're a publicly traded company, we can actually go out and use that to entice other competitors to kind of partner with us, because we're giving them not just an exit strategy, but potentially a way to use our new tools that we're building and our existing tools to put that data in and make it valuable for them. So with that, I'm not going to go get too much into more stuff, and I'd rather go kick it right into the Q&A if you guys are okay with that.
That sounds great, Frank. Thanks for a great presentation. Christina, what's your first question?
Right. So in addition to your subscription model and then your remarketing options to your current clients for your other products that are in the pipeline, have you guys explored ad sales or advertising partnerships for your digital
I'm so
platform?
glad you asked that question. So again, we took this thing over, and we realized quickly this could be a tremendous cash cow. To date, Sentiment Trader has never sold an ad. They've never sold a banner. They've kept everything very, very clean. We understand that even with the free subscribers, there's a path forward here. We took a deep dive into the newsletter business, and we understand that if we can grow this, even the free subscribers are very, very valuable to us.
Yeah. Perfect. Thank you.
Thanks. And Russ, what's your first question?
Yeah, just one quick question. Clearly, the number of subscribers is a good measure of success here, right? But more, I guess more granularly, how are you benchmarking the quality of the insights you're providing against, competitive products?
And I wish one of our analysts was on this call, because I think they answer that better than I could. But number one, I think that our customer base speaks for itself, and most of our customers have been around for a long time. I think there may be no, that's the management team. That's actually our analyst. But our analysts are on CNBC, Fox News. Regarding how we benchmark our data, it's a little hard to say, because our data is not something that many people are using, but the who's who of trading is using it. Sentiment analysis is not something that is, it's not prevalent in retail world. They're still working on the old PE ratios and, the old system. So sentiment analysis, you can argue, is kind of a little bit new, even though it's a mix of technical analysis as well. So what I would say is that the proof is in the pudding, that our existing customer base has been with us for a long time, and they definitely use the data, and it's actionable for them. And if it's actionable for some of the people we have, and some of the testimonials that we get from them, I think that it's pretty good, strong data.
Thank you.
Great. Andrew, what's your question?
Okay, correct me if I'm wrong, but the underlying premise of the logic that your technology uses is behavioral finance versus, the efficient market hypothesis. What type of value do you provide to the individual that doesn't trade simply off of sentiment or behavioral finance, but rather does rely on what you call antiquated quantitative measures of trading?
Great question again, because this is the world we live in, and I'm sure, Andrew, yourself. First off, we do have access to other data feeds to complement our data feeds. So it's not a question of just using sentiment analysis alone. Personally, we believe that actually having 3 different ways of looking at the data will give you the best way to just make your decision. So it's not that we hate, fundamental now. We actually think it's good. I'm a Bill O'Neill guy, man. So I'm IBD, CanSlim, I'm active in that space, right? So what I look for is the entry and exit points where you can figure out, okay, you know what, this technical point is good, this fundamental point is good, and now the sentiment, the wind is in the sails now, because we are in an age of kind of Robinhood trading and GameStop, right? They don't make sense, but the sentiment makes sense because people just love these things for those reasons. So I don't know if that exactly answers the question, but that's the best I can come up with.
Yep. And then to kind of quickly follow that up, it's okay, let's assume and what you mentioned is your sentiment bot is trained after 20 years regarding, this information and data you got from Sentiment Trader through the acquisition. My question now is what is the data source for your public equity information? Because then what's the difference between taking a Gemini 2.5 wrap, feeding it with the last 100 years of it's available on Google information, then giving it quantitative
So I cannot mention that now, because we just IPO'd, and there's a lot that I can go into, but I cannot go into it.
Okay.
Yeah, we have
That's sick. That just made the questioner and me is just very happy. Never done that before. Appreciate it. Thank you for that experience. That's awesome.
There's good stuff coming. I'll say that. And I will also share that even though we're a public entity, I like to call what my partners and I do public venture, where our valuation is still pretty low. But for us, this is about awareness. That we're working with Hall. Whether you buy in or not, it doesn't make a difference to me. What does matter is to bring awareness to Sentiment Trader and Aether Holdings. So what it's about really is that if you think there's value here, I think that there's a good valuation in the company still. And this has been, just to give a background on myself and my partners, this is actually the third IPO that we've taken public over the last 4 years. Last year, we were invested in the best IPO of 2024, which was Nano Nuclear. We're one of the original investors in that. And we live in the microcap, nano-cap space because we believe that is where the money is to be made in the public markets. For us, it's a question of getting these companies public so that an Aether can have that measure of liquidity to us so we can build it up and use that roll-up strategy. So just in case you're wondering, like, why would these guys go take this public? We just feel that there's a lot of value in the stock and what we can do and what we can buy, and really be competitive with some of these Silicon Valley companies that can throw a ton of options in stock, except we're kind of giving these guys a built-in exit. It's not like we're giving free trading shares or anything, but there's definitely a reason for you to want to join your startup or your company with us. And also we can easily raise money in the capital markets.
Great. Thanks so much, Frank. Great presentation. Great questions, guys. Now we'll bring up our final presenter, Hey C. Shaylee, whenever you're ready, launch your slides and kick off when you have it.
Okay, let's go. It was fascinating to see all these data and, amazing high-powered things coming in. And here I'm going to talk about teachers. So time to switch your mindset from high-energy data to high-energy teachers. Let me share my screen. Okay, everyone. Thank you so much for joining in today. My name is Shaylee Burnwald. I'll tell you a little bit about myself, the problem we are solving, the company, our raise, and so on and so forth. But Hey is the world's first conversational AI coach for every teacher. What that means is that if you've seen anything about AI assistants and how the world is moving, Microsoft is very soon going to launch AI companions. Each one of us in the next 20 years or so is going to have an AI companion or an AI assistant who truly understands our work ethic, our life, and helps us around with it. Hey is going to be the first AI coach for teachers. Our premise, I will talk to you about it, but let me tell you a little bit about myself. I'm a serial entrepreneur. Education is in my blood. I'm an engineer, then I got a teaching degree. I worked as a teacher for several years. Before this, I built one of the largest and most successful EdTech K-12 companies called Elevate K-12. Elevate K-12, I took it from 0 to 40 million ARR, raised from investors like General Catalyst till the Series C. Last year, I stepped down. I made my COO the CEO. The company was scaling too much, and I wanted the smell of a new company. And when I started working and talking to my customers, the problem surfaced in front of me, which was the new age teachers are leaving the profession. So Hasey stemmed from that. At a high level, I know that any investor who's betting at an early stage like we are today, I've heard many investors say we bet on the jockey, and the jockey makes sure that the horse leaps and bounds and wins the game. So of course, you know about me. My chief operating officer, Kim Cross, was my chief operating officer in my previous company. She has over 20 years of EdTech experience. She has 3 successful exits. She started with me. We literally started a month and a half back, and we have contracts and we have everything going, and I'll talk to you about it. Jin Wang is our CTO. He just started last week. Jin has been in the AI world for over 15 years. He's already had 2 successful exits in his AI companies. One is Actana, one is Groove that was sold to Clary. And when I was building this, I was very clear, if you've seen about any AI assistants being built, they're going to be very small teams. My previous company at one point of time had over 150 engineers. This team is not going to have more than 6 engineers for the next 5 to 6 years. That's just how these AI builds are going to be. The most important, and one of the important, is who's on our board. The way I'm building this today is I want experts early on guiding the strategy and growth of the company. So Jay Parekh, I met him through General Catalyst a few years back. He became a good friend of mine. Jay basically it was the head of engineering of Meta from 2009 to 19, then was the CEO of the cybersecurity firm called Lacework, is now leading core AI at Microsoft, is reporting straight to Satya. We are building this on the Microsoft platform today, and Jay is an advisor on the board and also investor in the company. I'm also surrounding myself with several high-profile superintendents, not for anything, but AI policy in the K-12 space is new, and I want to make sure that we as a company are at the leading edge of it. At a high level, I believe that professions that provide support to other professions like teachers, nurses, caregivers, they're not going to need assistants, they're going to need mentors and coaches. And I know teaching and selling to school districts to its core, this is our round 2 to go all around it. I'll skip this slide in the interest of time. What is the problem I'm solving for? Okay, just take 3 seconds and think, how many people in your network today, friends, families, kids, nieces, nephews, are dying to be a teacher? Anyone? Anyone. It's a dying profession, right? You think about this 22, 23-year-old, they don't want to be teachers. We're all sitting at home right now, and we still expect this person to go to a school, deal with everything that is going on, don't get a good pay. Teaching is a dying profession. But guess what? There are still people, mostly women, who still want to enter this profession for the joy of giving back. Nursing and teaching are 2 professions where people go into it because they want to support and mentor and help other people. But in both cases, they're leaving. When I dug into why they were leaving, they are burnt out and they're not getting any support from the school districts. When you think about education in K-12, a lot of investors think selling to K-12 is hard, all the funding is going away. That's all BS. Any company, if you're solving for a problem, you have a good solution, it will sell. The beauty about EdTech is once you get the distribution channels right, which I know with my experience in Elevate K-12, it's not very competitive because it's hard to crack into the K-12 market. But once you crack, you grow by leaps and bounds and not only change the society, but create tremendous value for shareholders. When I was building this, I just went to Reddit and I looked at what new age teachers were talking and they were frustrated, okay? The old teachers stayed for pensions. How many of your mom's friends, and all of them have said, I'm just going to wait for my pensions to kick in. You think a 23-year-old even knows what is pensions or cares about that? So districts are in dire need of creating a new way to support these new generation teachers. What they are doing today is absolutely outdated. And honestly, without AI, I would have not been able to solve for this because it would have been too expensive. AI has opened up a whole new category and opportunity to now provide support for these teachers. Today, on an average, any school district is spending $4,200 per teacher on professional learning. And the way they are providing it is once a month, the teacher has to sit in some workshop and watch. And once a quarter, the teacher has to sit in some workshop and watch. That's not what the new generation want. The new generation, I say Gen Z, millennials loosely as new generation, they want to be coached instantly and on target. That's where Hasey comes in. Hasey is the world's first personalized AI coach for teachers. If you guys have watched TV in the last 2 weeks, and I hope you have, Facebook has just launched this campaign, which is the best way for me to explain to investors. My marketing team is already working on something like this. There's this couple where the girl says, meet my father, he's a thermodynamics professor, and the dude just goes on Meta AI saying, hey, teach me about thermodynamics quickly. He's in the cafe, he's in Uber. That is exactly my use case. A teacher can walk and talk to their coach and get whatever support they want at their fingertips. Hasey is AI. Hasey is an expert in all things K-12. It looks and talks like a human, so it's a conversational AI. It's available 24/7. It's very cool. It's new gen. It's hip. And if AI cannot answer the question, I am going to have human coaches. As we build this,
the ratio of human to AI will flip, but anyone cannot launch anything AI, especially in the environment today, without having a backend support, because I got to keep training my data models. Hasey will primarily be an K-12 expert, but most importantly, it'll help with professional issues. How can I talk to this mom who's really angry about their child getting a C grade? 2 weeks back, dating app Tinder launched a tool where if you're on Tinder, you will be able to role play with a date. That's what we're doing. We are actually creating some tools where a teacher can role play with a student. They can role play with a mom. So those are the professional guidance that the coach will provide. It'll also be an executive assistant or chief of staff, just like this new app, Ohai.ai, which is an app for moms. Add this on my calendar. Remind me to buy cake for my husband. Plus, over and above that, Hasey will do check-ins. Hey, Susie, how was your day today? How did that class go? And it's easy to build that through the algorithms. Hopefully you guys have seen the video that was there. If not, you have the deck. If you click here on the right side, the video is there that will give you an idea of what this is all about, but it's conversational and it's on target. The way we are building the models is the base is ChatGPT. On top of ChatGPT, we currently have content curators. We've selected 20 modules, which we feel are very important for our pilot launch. Those 20 modules are being curated with the best answers and resources. By end of this calendar year, what is most important to my buyer, that's a district, how our coaching integrates with their resources in the district. And that will sit as a top layer every time we launch into a district. What is the market size? Today, districts are spending, believe it or not, $16 billion on professional learning for teachers. The federal funding for professional development was $2 billion. The president kept saying that he's going to cut it. He did not cut it. He said it, but he didn't cut any of the funding. But even if I remove that, every year $16 billion is spent. All we are doing is we're saying, hey, instead of spending on that, take a portion of that and spend on this, because now your teachers can get instant support. When I was building the model, it's great to build a product, but it's equally important to start thinking about your go-to-market strategy and your revenue generation early on. And I am that entrepreneur who likes to see cash quickly, revenue quickly, sales quickly. Fundraising is awesome, but you got to see the cash flow coming in from your customers, because that's when you can say that the usage is happening. We're starting with public school districts and charter schools. My previous company is operating in 600 school districts in 37 states right now. So we already have those networks into those school districts. Eventually, we will launch into private schools as well, but we are talking to universities because we want student teachers to get access to it early on. Now, who are we selling to? We're selling to the school districts because selling B2C is very capital intensive, but our user is going to be the teacher. It's only $84 per teacher per year. It's the price of 2 Starbucks coffee a month that a teacher can have their own AI coach. I had been thinking about this model for the last few years, but I could never get the financials right. But with AI, it was absolutely the right time. And the way emotional EQ of an AI is evolving, we're just going to continue, keep evolving. Our specific ICP is districts between 500 to 2,000 teachers. In year one, we expect 50% active teachers to come on the platform. So that will be about 57,000. And then year two, on an average, 90%. So that's the usage growth that we expect to see. And then it will be a recurring revenue at an average of about 103. I don't like to have big projections. I like to look at what I know today from my data points and project an annual revenue run rate that I absolutely will hit. This is not going to be my last company, and I never want to lose investor confidence. Right now, we are already closing contracts, $250,000, and in a few months, we'll have about 400,000 already booked. I just started the company a month and a half back. If I just consider very conservative growth, I can be in 297 school districts and about 32 million annual revenue run rate by 2031. The goal, of course, is to crush and blow past that number. But right now, with the data points that I have, that's where we are heading towards. Our product development started actually a month back. We hired a small team of AI experts to start the MVP. We didn't want to wait for the CTO to start. We're already in sprint 3, and we'll start seeing something tangible in about 3 to 4 weeks. We not only are we already closing contracts for fall, K-12 selling, like government selling, is a long sales cycle. So today we've already hired our VP sales, and we're already starting to sell for next school year so that we are ready to close those contracts at that point of time. What is going on in the market with AI today and K-12? Again, investors feel nervous about K-12, but again, I will say, if you get it right, you have market dominance and there's no lack of money. So I'll talk to you about 2 deals, and AI is very new in K-12. So a lot of districts are just buying because they just know that AI is going to be so prevalent in their industry. Magic School AI started 2 years back. They are AI assistants for students and teachers. It's different, but they went from seed to Series B. They just closed their B round of 45 million with Bain Capital and Valor Equity. School AI again started 2 years back. Same thing. They're a competitor of Magic School. They just closed a 25 million Series A with Insight Partners. There's another company, Ojai AI, which is AI for moms. They closed a seed of $6 million. So anything with AI assistant companionship in the caregiving, teaching, nursing, moms market is very new, and it's endless to what the potential can be. We feel very fortunate that we have the experience of selling to teachers and selling to school districts. We're just bringing that expertise back to build this in AI. It's a $2 million seed round. Honestly, 30% is allocated, about 600,000. I got a term sheet. I was starting it as a convertible note, but as people started hearing about what I was doing, I got one term sheet last week. Another VC is writing a term sheet. I think I'm going to take the first term sheet. So all investors will then come on that round. So if that term sheet comes in, about more than 50% of the round is already filled. I'd like to get out of fundraising quickly so I can go to building the company. The convertible note has a valuation cap of 10 million. Most of it is going into product and development. Sales is not very extensive in terms of its selling, but the thought leadership of bringing it out in the market is. What can be an exit? Very hard to say today, but the patterns in the industry are a large private equity firm buying it and another large K-12 company acquiring it. I'm very open to either one of those. Some liquidity event for early stage investors by 2031 is what I'm working backwards from. So I think about it, my exit from when shareholders can get out, and especially angels. My previous company, we had 85 angel investors. So I know that thinking process. And I think AI companies today in EdTech are trending at about 10 to 15x top line growth. It could be more, but that's what I learned from my research and pitch book. So that's ACAI. I'm happy to take any questions, guys.
Let's start with Russ. Russ, what's your question?
Well, it was very thorough. It took me a while to kind of figure out where that was going, but once I did, it all became crystal clear to me. Just to get into a very quick question. My wife is actually in the K to 12 education space, and that results in a lot of exposure to a lot of teachers and mutual commiseration sessions. And one of their biggest frustrations that I think I've seen is their view that school administrators are ill-equipped and not prepared and don't have resources to get better. And that's a real source of frustration. Any plans to expand into helping administrators get better with coaching?
Absolutely. Yes. We've heard a lot that principals are resigning and superintendents are resigning because of all the pressure. Yes, but I also want to be focused on teachers first and scale. And that's what I said. Any projection that I'm doing right now is teachers and one segment. There's so many other parallels. This could go to principals. This could go to superintendents. This could go to nurses once we build it right. So the answer is yes, there is a potential. Am I thinking about it today? No, because I got to launch this and get my first 12 months out.
Understood. Thank you.
Yeah.
Great. Andrew, what's your question?
Yep. So I want to understand kind of the technological differentiation between ChatGPT, which has been used to kind of build or wrap this existing model. So immediately, you talked about how you're going to support teacher career obstacles through the role play feature of your bot. And where I'm kind of curious is, how do you accurately shape this model if it's trying to help teachers through conversations with, for example, in your pitch, you said with the parent, but typically those conversations happen privately. Nobody's recording conversation. What data do you go off of then to train them to do that task?
I'll give you a simple use case because we actually played around with it. So a teacher just got an email from a parent saying, why did you give my child a grade C? My child deserves a grade A. I'm 23 years old. That mom is 55 years old. I'm totally freaking out. When that email comes in, the teacher has nowhere to go. So the teacher goes on Hasey and say, Hasey, I just got this email. Can you please help me with it? And Hasey will voice talk, but she'll say, hey, if the mom is coming to meet you, so this is an email reply that you can give to the mom right away. And then she'll say, hey, but the mom is coming and meeting me. Great. Then she'll immediately say, would you like to role play how you would like to talk to the mom?
Gotcha.
That's
Okay.
the use case. Yeah.
Gotcha. And then my last question here really quickly is, I know it helps with coaching, but does it happen to create content for teachers?
Yes, it does. So not great. So we have 8 categories of what they will help with. So if you remember, the first bubble was K-12 expert. It was all about, hey, I have to teach fractions to the special needs class. Can you please help me with some lesson plan ideas? And the way those lesson plan ideas will come, the first source of information will be ChatGPT. But in our user interviews with districts want us to eventually align with whatever curriculum they're using. That is so big. I cannot tell you how much money will go into this when we have that plugin in, and that we are launching end of this calendar year.
Okay.
Great. Christina, what's your question?
Right, so I'm primarily from the med device space, so apologies if this doesn't apply, but I think the first thing that comes to my mind is there any data privacy concerns around the teachers inputting information about their students, or is there any data concerns around
That's the
from the teachers?
beauty. So firstly, having built one edtech company before, the student information systems, how to make it secure, we understand that really well. But the beauty of this business is it doesn't need any student information today. If we evolve tomorrow, and that's why I'm saying there are other companies that are building for students, we are purely building to support the teacher in a way that when this is available to the teachers on the phone, let's say I'm in Austin ISD and now I'm moving to Round Rock ISD and Round Rock doesn't use us, we'll make it available to the teacher on their personal IDs. And a teacher can pay $7 per month. We're also talking to some insurance companies to see if this can be offered as a benefit, like dental and vision, and mental support is very big in the industry right now. So that's how we are thinking about it. Like today, there is no access to the student information system. Tomorrow, if it's needed, we're very well versed on how to do that.
Perfect.
Right.
Thank you.
Welcome.
Great. Well, thank you guys for that. Great presentation, Shaylee, and great questions from the panel all the way throughout the day. I want to thank everybody for joining us today. We are at the end of our time and now moving into the breakout sessions. So if you would like to, we will have you join your own breakout room, and you're allowed to move around as well. And after that, we'll be concluded for today. We'll send the results to you guys afterwards, but thank you guys for coming today, and let's move into breakouts.